8/14, 2012, 10:31 a.m. Pacific Standard Time. MMTs, index options, calls and puts, we trade them all the time. Learn how to buy the volatility when the volatility is a very low price, upside volatility in this case. When we couldn't break 25.50, we're buying those $2,700 calls when they were for pennies on the dollar almost. And now you can see this parabolic 4-week move up here to this resistance level where we had this major gap down and we shorted and we hit that 2,800 high. This is the calendar 2012 high, MMT, our first short and trading that volatility. Then the reason why I blew this side of it up for you, MMT, is because I wanted you to see that in your platform it'll be the same way. However, you can see every time we've been going parabolically up during this summer period. This is 4 weeks right here. 1, 2, 3, 4, and I'm using this last 4 weeks. Here's this 25.50 area. That was that weekly. Remember, we could not break it. And how far they were going to take it would be, no one would know exactly. However, you would know when you were buying back over here, the 27.25 call that was featured back over here. And this is a daily. And I can show you what date it was and why they make so much money. These were buyable at $1.30. And we had featured these up and out of the money, Nasdaq. But you got to remember that this was back on 7.25 when they peaked in value, just like they did here. Each time they come back down, but they were buyable. And so that was the upside volatility. And then they really deflated them, and they were buyable, and you could have got in down here. That's learning how to use this $1.30 to, let's say, $2 entries here. That gives you what you need. Upside volatility in markets. And right now, well, on this Nasdaq 100 27.25 call, it's right back up here in its major inflated areas, meaning that, yes, they are inflated, the 27.25 call. And when they get too inflated, they come down, as they always do, as we learn that you have to know when to sell these things. When you get these daily breakouts on the calls, you have to know when to sell them so you don't get hammered in these index options. This was the $27.25 call. And that the Nasdaq 100 right here is at 27.33. It was higher than that. Behind here is a weekly chart. I'm also going to show MMTs. I've got the 2001 level. It's all right here. What I would like to say, this is going to be your support level. It's this 2700 level. That goes right across over here where that reversal was in 2001. I remember it like yesterday. That was on 128, 2001, and we went straight down. That will be your short-term support, and we're going to use this time frame. Now, one of the things I'm going to show you is this 2800 again. This is a 1999 breakout to the top, so I was there then too. However, 2900 sits up here. It would not be unheard of if the economy was to change around, everything went the right way at year end, that you could break up higher. We've been in a 12-year bear market with the worst economic crisis year to date. All of that. However, if these markets were to change, and we've always said this, that you could go a lot higher. So I'm calling for, here are the trend lines, okay? So basically, let's take a look. Now, when we look at where these upper trend lines came from, of course, there's going to be one in here right around 3,000 as well. I just drew those very quickly. However, I don't see this happening anytime soon, but this is the upper end of these resistance areas. It would take, and this has been once again, when we had the 2012 year, Mid-year, we put in the bottoms and we were getting that long, and we had a great ascending base to head us that way if they could get their fiscal policies and all of their various different things they're going to do in order. So this is the top of that resistance channel of calendar 2012. I will tell you that this is a weekly chart. This was a major area of resistances where we had sold short in the first calendar of the year. It's all on our stockmarketfunding.com website. Once again, it's going to come down that if I'm trading a 8/18 monthly expiration Friday coming up, this was 17.30 on the low and 23.20. Now, let me show you the put chart of that 2750 put. Let me show you how deflated this put is. This put is extremely deflated here. It's never been this deflated, and because we've been rallying up, this side of the market is the cheapest side of the market, like I showed you about buying the 27.25 calls when they were $1.30 to $2 a call. Well, here in this particular contract, we are getting into a zone of deflation. It doesn't mean that it can't go lower, and it could if we can continue to break higher. However, this is the 2750 put chart that most people don't even know how to use and operate. So the Nasdaq 100 on this weekly level has got to clear this major short-term resistance level. 2743 is the top. This is where it started in the calendar year, MMT. We'll leave it at that. That's my update, because once again, we have to do that work. We look at where the... See, what people don't understand is how deflated this 27 put. And it can even get... See, it got down to 1730 today. And it got up... Look at the high. It was only 23. It was 28, so it got deflated. This is where we buy, down in here. Open volume today on it, and it expires Friday. It's a monthly, but it's tradable intraday. Once you learn the key master ways of being a market maker at SMF, this will lead you the way.